We are seeing higher prices in food, and that has a major impact on those with fixed incomes, those who struggle to stay afloat, and of course, those with mounting debt. The world is seeing massive multi-layered problems, and the central banks have offered their solution. More free money for banks. Wait, what? You came here for the truth, so let me unveil that for you. Today we're going to talk about the food prices that are rising. I know that this is hitting a lot of people. We've been covering this for a while. You have been sharing your stories. You've been talking about what you are seeing at the grocery store. Those are very important statistics. Actually getting the items and documenting what their cost has been over the years. That's true inflation. We are seeing the price inflation clearly being a problem for a lot of people. So we're going to cover that information. I want to look at what's been happening with the central banks and what the Federal Reserve might do in the fourth quarter of 2021. So let's go. Crops won't stop. Gauge of agricultural commodity prices at the highest in 8 years. And of course, you could see where it has gone from 2020 and beyond. We're looking at a major spike right now. And like I said, this hits people in that bottom 50% particularly. And then you see how this has been affecting the supply chain all along. And you were told, although in my opinion not true at all, that the manufacturers of these different products would not increase the prices that you have to pay. I don't know what they're smoking, but my goodness, give me some of that. The grocery price shock is coming to a store near you. A key measure of farming commodities has surged in recent days. Corn, wheat, soybeans, vegetable oils, a small handful of commodities form the backbone of much of the world's diet, and they're dramatically more expensive, flashing alarm signals for global shopping budgets. This is big news, all right? Now we have to look at this very clearly and understand where all of this is happening, and you look deeper and realize it's just about everywhere. And then it's not just these particular crops. These particular crops are also being fed to the livestock, and that makes them more expensive. And then they go and all down the chain, everything is getting more expensive. So the prices you pay on just about everything are increasing. There are more than one reason for this, of course. It's not just the supply chain disruptions, though that is front and center, though that is a big issue. There's much more to it. This week, Bloomberg Agricultural Spot Index, which tracks the key farm products, surged the most in almost 9 years, driven by a rally in crop futures, with global food prices already at the highest since mid-2014. This latest jump is being closely watched because staple crops are a ubiquitous influence on grocery shelves, from bread and pizza dough to meat and even soda. Of course, this is going to hit people, and it's not a good thing. Then we have the S&P GSCI Agri Index, same situation here. Out of Reuters, grains. Corn around 8-year highs on tightening world supplies. Wheat has been up as well. Soybeans at the 2013 peak. Looking at all of the different markets, and it is very clear that they are spiking. Look at corn futures. Look at soybean futures. Look at wheat futures. Guess what? All having the same patterns right now. And you could look at what Albert Edwards had to say. And I think it is very important to note this because it's not just one factor. He said this: "I'm not sure if central banks will ever realize not only do their QE policies increase inequality and fan the embers of popularism, but after having done that, rocketing food prices ignite that discontent into raging infernos as occurred during the Arab Spring a decade ago." And so, although I'm not going to agree with everything that somebody says, I just want to note something. What the central banks do, number one, do create inequality. We know that. But you're never going to hear that from the mainstream YouTuber out there. You're definitely not going to hear that from, all the so-called alternative news outlets and the mainstream. Honestly, let's forget about it. But I'm willing to say it. And I know it's not popular, but clearly not a popularity contest. And That's just the situation we are in. When you have food prices rising in places where they're already very expensive, where they already have shortages regularly, when there might be rolling blackouts, when they've already dealing with so many different issues, and then the food price spikes up to 30%, 50%, 100% higher than what it was before, you have major, major problems, as we saw in the Arab Spring. And could that happen again? It's absolutely possible. Revolution alert. After a pause to refresh, the copper price rise, and again, most think that this is a sign of strength in the economic cycle, but the surge in agri prices, just as in 2011 that triggered the Arab Spring revolution, suggests that this is more to do with QE again. Interesting note, to say the least. No Money GPS video would be complete without a few mentions of the Federal Reserve, and of course, we're looking right here at what they intend on doing. A lot of people don't realize, but they are trying to intentionally create inflation. They want to inflate the monetary supply, but they also want it to increase prices. You have to realize that. They are actually actively trying to increase prices. They say that. They admit that. That is their policy. So when we have rising prices, it's not a coincidence. That's the goal. Let's look at this here. Powell and the other Fed officials have made clear that they want to see inflation actually exceed their 2% annual inflation target, and not just briefly, before they consider raising rates. The Fed's policymakers have said that they would like inflation to remain above 2% for some time without specifying how long that might be. They got to be vague, but not too vague. They just want to get all the benefits, all the juice out of their so-called forward guidance. They've set the goal so that inflation would average 2% over time to offset the fact that inflation has been stuck below 2% for nearly the entire past decade. Fed policymakers favor gains at that level as a cushion against deflation, a prolonged drop in prices and wages that typically makes people and companies reluctant to spend. Oh, you don't have to worry about that. You're giving every incentive for people to spend. I've got countless documented facts related to that. You know what they're trying to do, and it is quite obvious. Fed to announce bond taper in the fourth quarter, according to economists. Can you believe this? That's what they believe. I'm not saying it. That's what they believe. I'm going to show you this. If I zoom in, when to taper, plurality of economists expects the Fed to slow purchases in the fourth quarter. Is that true? What do you think? Let me know in the comments section. But we're talking about a large percentage of them suggesting that this is actually going to happen. Sure, it might be just a very, very small amount, but we'll see. But why? This is my question to everybody. And of course, in a sense, it's really just a rhetorical question because I'm talking to my microphone right now and nobody is here with me. So we're looking at this really as a question that makes you think, why? Why in the world, if inflation is not a problem, if you have no reason to actually change your policies, why would you? Why wouldn't you just keep this going forever? I have heard from just about everybody, there's very few left, that suggest that what the Federal Reserve is doing is actually creating a problem. So why not just continue? Out of Bank of America, mentions of inflation on calls more than tripled so far, pointing to higher inflation year over year. Change in S&P 500 companies' mention of inflation on earnings calls versus the CPI year over year. So you look at where the CPI has been, you're seeing that sort of trend. It is there. When they're talking about it, you tend to see the spikes, and when it comes down, there's tend to be less of a mention of it. But right now, the expectation is definitely there. And then we have prices that have been rising on all levels, not just necessarily food prices specifically, but we have this, the regional Fed manufacturing surveys, prices paid indices are surging. Absolutely. You are noticing what's been going on all over the place, and the manufacturers and the suppliers and all of these different businesses have had to deal with logistics issues as well as higher prices. And what do you do as a business when you are experiencing higher prices and your profit margins begin to shrink? You have an option. You can find another supplier. You can look for different methods to reduce your costs. You can maybe lay some people off, or you can increase prices, or a mixture of all of them. And that's something that we are seeing today. Bank of America had this to say: inflation is arguably the biggest topic during this earnings season's. Raw materials, transportation, labor, etc. were cited as major drivers of inflation, and many plan to or already did raise prices to pass through higher costs. I told you that was coming. It didn't take a genius. Trust me, I'm not a genius. I don't have a crystal ball. If I had one, I would let you borrow it. But what we're seeing here is, quite frankly, pretty obvious when you know how these businesses work. But you look all over the place, and this happens to be just an example of that. Gallup Economic Confidence Index has continued to increase. Of course, there's more and more confidence out there, confidence in the government, confidence in the politicians, confidence in the stock market and the corporations and so on. And people are always swindled. We know that that's the case. Couple quick notes here about GME. GameStop, this particular stock has done very well. I wanted to give you some updates on it because there's a lot of attention around it, and this happens to be one of the retail trader favorites over the last little while. Perhaps no one, not even the day trader's hero called Roaring Kitty, is more responsible for the improbable 700% rally in GameStop this year than Ryan Cohen. 35 years old, he's a billionaire. He co-founded Chewy, which is apparently a pet supply site. And so when word got out in mid-January that he had secured 3 seats on GameStop's board after amassing a 13% stake, shares of the video game retailer exploded. What had just been something of a run-of-the-mill outperformance in the bull market turned into a parabolic surge overnight. This is the chart going back, and you could see not much activity, and then we had that massive spike upward, but then it came down just as fast. And then we look at what had occurred here. Suddenly, things aren't so crazy anymore because the stock is being pushed higher, and it's higher than where it was based on that initial spike that we had seen, around February timeframe. So it's just something I wanted to mention and follow it, keep an eye on it. That's all. The official headcount of the US is now at 331 million. I can tell you the amount of people that are actually employed is significantly lower. It is important to look at what's going on with the demographics of any nation because that is very telling about the future. And you could see many countries in the West do not have enough coming through that it is, let's say a positive trend. But we'll see what happens over the next 5 years, 10 years. I think it's going to make a real difference because most countries are going to experience a population decline. This happens to be a very small decline, because of everything, immigration slowing down and so on. But I want to follow the trends, and specifically talking about the demographics, I think it is really key. Always trying to bring you a little comedy in these videos. Jim Cramer throws cold water on talks about market peaks as economy starting a new cycle. It's like when you're going to the used car salesman and there's smoke coming out of the hood and he says, no, that's a feature. That's a feature. That's not bad. That's a good thing. That's a good thing. I mean, come on. It is ridiculous. All right. Now you have this. This particular individual is 11 years old, Jersey City whiz kid who offers free financial advice, the best kind, to thousands online. He's got 5,000 subscribers apparently. And, he seems like a nice kid. He's learning from his parents who I believe are in the financial industry and gives just basic advice. He's supposed to, invest your savings, get it in there, get into the markets over time to compound interest and so on. All right. no problem there. But I just think it's interesting that you've got people who have extremely, very low experience historically. They don't really understand all the ins and outs, and they haven't even lived long enough to see an actual crisis, but yet they're giving advice. Not talking about this kid specifically. He seems like an innocent guy. I'm just pointing out the obvious fact. When the shoe shine boy is giving you advice, when the Uber driver is giving you advice, you know that it is really, really hot out there. That's for sure. And now for some news that absolutely nobody cares about. Federal taxes, spending, and deficit all set records in the first half of fiscal year 2021. But of course, you expect that. And then to finish off the video, Kanye's Yeezy sneakers snag a world record of $1.8 million in private sale. It's very, very strange to me to see a dirty pair of sneakers selling, but hey, what would I know? And that brings me to the insights for today. And I just think that it's a little bit out of whack what we are seeing. But what I want to note is specifically that people should be careful with where they put their money, have it spread into different assets, have that diversification, and knowing that is always going to help you to sleep at night. That's all for this video. If you found that informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. If you want to learn about e-commerce for free, you can do that at the AmazonGPS.com. And if you want the entire financial system explained, I'm talking about central banks and interest rates and all that, is in these two books. So you definitely want to check it out at the link in the description. And if you didn't see this video yet explaining Bitcoin versus gold, I get into everything, where to buy it. All the details are located right here. Click it and I'll see you there.